tax-free funds. They all rely on treasuries to be the safe haven risk off. Rules-based, not based on my discretion. I said it was held back in April last year because I could see the flight to safety trade wasn't working. But you can't do anything about it when you're quant-oriented and you have to manage your perspective. So before anybody tries to jump on whatever happened last year was an unequivocal anomaly. Full stop. I know the data.
Test
I can
these
show it and prove
lows,
it when you look
and
at
then we'll go on
how
long.
treasuries interact against equities.
It's not breaking it.
Around that
If
period,
it doesn't break,
then August 10th, I said every W needs a V.
we could continue along.
Then I said the end of the world is a bull case October 3rd. Then I went to full-blown, I believe there's an imminent crash starting December 2nd. You didn't have a crash in the stock market, but you had the 5th worst December in history. And then after the first week, I said, it's not as clear. And then I said, no, it's okay now. Okay, conditions are there. Okay, let's focus on something here. Too many people focus on the call. Conditions favor probabilities. Probabilities favor the outcome. End of story. It's not about the right side of the equation. It's about what goes to the left of the equal sign. Now, where we are today, a lot of people have been flat-footed by how strong this move has been. You look at lumber, 40% move in the last month. You look at home builders, unrelenting outperformance. All that, by the way, is not consistent with the bearish narrative. You are starting to see
I'm going along.
Reflationary behavior.
We're going to put our stop loss right below.
In the context of high inflation. But when you look at what's been leading,
we're going to put our TP up in this zone.
Weakness in healthcare. All the things are reversing to start the year. Okay? And it's happening as, I believe, a lot of, you can argue bears, whatever it is, a lot of people have been conditioned to be negative. Now, this is a really, really important point. This is one of the reasons I argued on October 3rd when I started to be being very loud and talking about it. The way that the S&P 500 was down last year was historic. 59% of the weeks the S&P lost money. If you look at the weekly data, 59% of the year, the S&P 500 lost money. Folks, you're not supposed to be able to consistently make money shorting. You're supposed to be able to do it in these concentrated, high magnitude type of trades, not through frequency. So you had this odd behavior, usually staircase up, elevator down. Instead of
if we test this, we're adding the position.
With the way
this is
that
what
the
we were
weeks
looking
of the
for.
S&P lost money,
Did
to
not
think that
wait
you would
for
continue in that kind of pattern. So, about
I love how this closed.
So normal for the S&P was 1931. We're not in a Great Depression. Okay, so this is about behavior. Right? People have been conditioned to be bearish. I can see it on Twitter. I see it with the kind of comments people come at me with when they haven't back tested a damn thing. And I know what, over multiple cycles, large data, how these relationships tend to work. The most important dynamics are utilities weakness, that's consistent with risk on. Staples weakness, consistent with risk on. Lumber outperformance against gold, consistent with risk on. Small caps, emerging markets, you're telling me all that is not what you typically see at the start of what could be a sizable run that sucks everybody in to then fuck everybody later? I keep going back to this point, folks. Bear markets are notorious for making fools of bulls and bears because volatility works both ways.
Okay, so does that mean that you're of the school of thought that this is a bear market rally? This is not the end of the market. It's going to suck everybody in, and then it could just spit us all out.
I just had Jeffrey Hirsch, stock traders on space earlier. And listen, I mean, this is the other thing. It's like people are just totally forgetting cycles. You're in a pre-election year. Historically, the third year is the strongest for the equity market. But you know what else was a pre-election year? Was 1987.
You have the 20 MA right here.
I don't know if there's going to be a crash like 87. Nobody knows.
See, is it going to crack it or not?
But if I'm right that there's a credit event looming, okay, you could have a move higher, like you had in 87. The Dow was still positive in 87, despite the crash of 87. It's just the Dow was up 30% before Black Monday. So it wouldn't shock me at all if you have that kind of a dynamic, right? And this might go back to, it's not about the prediction, it's about the path. Everything is ultimately about sequence. Now, by the way, if I'm right on that there's a credit event out there looming, but not yet, then I'm pretty sure that means the flight to safety trade has to come back. Last year, the bond market sell-off was entirely duration-driven. It was not based on credit risk. It was not based on default risk.
Let's see if it's going to hold this.
Risk off is about default risk off. You had a duration crisis last year. I suspect we're going to have a credit crisis this year. Meaning, we could look back and say, wow, the bond market had two horrible back-to-back years, but for very different reasons. Duration in the case of 2022, credit quality in terms of 2023, And
I
if
feel like
I'm
it's
right on
gonna
that,
hold it.
treasuries come back as the
I'm gonna move this
uncorrelated
down a
asset,
little
very
bit
high
more,
volatility, just like gold,
just
just like
because
oil.
I feel like it's gonna hold it.
All right, so on that note, what I want to do is I want to actually bring our YouTube channel in because there's a whole lot of viewers on the YouTube that want to join the stream. So I'm just going live on the YouTube. Give me 1 second. Let me just go live on the YouTube. And then I'm going to bring in a whole lot of viewers. So the viewers on YouTube can actually hear everybody. All right, so to the YouTube fam, welcome back. We are live here. We are waiting for Powell's press conference. We've received the 25 basis point rate hike that we anticipated. Right now, the markets are pretty flat. The S&P is flat. Bitcoin is flat. Waiting for Powell to come out speaking. And that's pretty much where we're at. Yes, okay, so if you're with us, you're also watching our Twitter Spaces. You're listening to our Twitter Spaces. We've got a great panel. In fact, James, if you could bring up the panel on the screen so we can see exactly who's speaking. And yeah, let's. You're now live on YouTube and Twitter, so we've got really huge spaces going here. We've got about 3,000
I'm
people
still
on
looking for
YouTube,
loans
and
here.
we've got about who's that speaking?
It's Peter. I just wanted to say something quickly because I want to bow out because I want to go watch what Powell says because then I have to do a live hit on Fox Business to discuss it. So I want to.
We're gonna broadcast that. We're gonna broadcast that live on this stream. So it's going to be broadcast live on this Twitter space. As soon as Powell starts, we're crossing over live at least for the first part of it. But go ahead,
I gotta hear the whole thing. But anyway, what I just wanted to make the point about Bitcoin that although now we've had a lot of conversation between it, but I do think that the correlation between Bitcoin and the Nasdaq is going to break at some point, but not the way a lot of people think. I basically think that at some point Bitcoin is going to go down regardless of what happens to the Nasdaq, because there's the risk assets in the Nasdaq. At least there's something real there. There are stocks that potentially could have a lot of value. Maybe they're going to have a lot of earnings in the future. Maybe they have earnings now, and people are speculating, are those earnings going to grow, and what is this business going to be worth? There's risk there, but there's something that underlies the risk that has actual value. I don't think that Bitcoin or any of these cryptocurrencies are ever going to actually have any real value. There's some speculation.
None of them, Peter. None of them.
Some people, let me finish my point. Some people here are speculating, one day Bitcoin will be digital gold. It's not digital gold now, but eventually it's going to be a store of value. Eventually it's going to be a safe haven. I don't think that's ever going to happen. I mean, it's all.
We're gonna add one more position. We're gonna put our stop below.
Qualities that would make it a store of value. It doesn't have any
We're gonna put our TP
It's just a
target
speculative token
this
with
top
no real
area
utility,
again.
other than the fact that people want to buy it because they think it might go up. So I do think that eventually it's going to break that correlation. But I think between now and then, yes, if people want to gamble, some of that hot gambling money may end up in the crypto casino, and other money may end up being someplace else. But I also don't think you're going to see a lot of institutions in the space. I think most institutions that were going to get in or who got in regret that the fact that they got in, and I think the ones that didn't get involved dodged the bullet. And I don't think there's the interest. There was some interest, the FOMO and all that stuff in 2020, 2021, but I think 2022 put an end to that. Everybody that stepped their toe in the water, in the crypto water, got frostbite, and they don't want to go back into the pool. So I think you're just left to individuals who are gambling on crypto, and I just don't think there's enough to sustain the pyramid. I think most of the people who want to buy already own, and I don't think there's more to keep the thing going. All Ponzi's, all pyramids or chain letters come to an end, and that's what's going to happen with Bitcoin. But anyway, I got to take off. You guys can discuss it, but I want to watch this. Maybe I'll pop back on after I'm finished with Fox Business if you guys are still going on. Anyway, take care.
Peter, thanks for joining
Great,
us.
thank you.
Bye-bye.
We've got
See you, Peter.
we've got Harry Dent using the crowd. I'm just trying to figure out. I'm trying to look for him to act as a speaker, but seemingly can't find him in here. request button to request to speak. Please do so.
It would be in the inbox. It would be in your Twitter messages inbox. That's where you'd find it.
On the phone, by the way. And here, please figure that out. Hey, Rand, if
Yeah.
this could come, make a couple points, man. I don't want to jump.
Yeah, go for it, please.
Here.
Yeah, please. Go for it.
Peter didn't run after dropping that bomb, but so yeah, I mean, a couple points. So like one, you know, and what you mentioned about like Powell and what he's saying verbally, right? Like I think it's important to note, like a year ago, you know, let's say December 2021, and right after, right, what was the public statements they're putting out? Like we're not even thinking about raising rates, and what do they do? Like I mean, literally the opposite, right? They raised it, you know, an unprecedented rate from where we were at that time, and my hunch would be that when we're coming out of the other side of this, where we do start to like, you know,
All right, I'm not liking this pullback.
Literally the opposite all the way up until they start, you know, cutting. So they're going to be signaling strength and saying, hey, we're
Not liking
we see
it.
many more rates in the future, and then like just on the other side of that, they're going to stop and or cut. And so, you know,
I am gonna go ahead.
hang there
Let's
for a
see
bit.
if
So I
it's
think that's
gonna
an
hit our
important distinction.
stop.
And then yeah, like
It's
sometimes
gonna
people
hold.
and they're jumping, you know, speaking about Bitcoin, and like it's important to note like where it's at, you know, within you know its cycle of itself, like needing to monetize. You know, I mean, if you have a $400 billion market cap of Bitcoin, you know, extremely, you know, so like significantly smaller than where gold's at. Obviously, at like 11.
All right, 6 minutes left until Powell speaks.
Is, you know, it is made up of who holds it as well, right? And so, sure, like you do have a lot more people in who are, you know, speculating on Bitcoin. There's obviously leverage in this system. There's all the things we're learning about FTX, of, you know, paper trading and not passing real orders to the market, etc. So there's all these different things with it. You obviously have like, you know, some of TradFi guys coming in for the very first time where they're treating it the exact same way that they do their
I
other
wanted to
risk-off.
crack that and make
So
a
they're
higher
gonna trade
high.
the same way they're gonna go risk off at the same time.
I want to see this
Again, like
cracked.
as you've got, and like Peter's point
This
about
zone
like,
right here, I want to
are
see
there
it
really any
broken.
institutions who want to get in? I mean, like, are we like head in the sand? Like, you have the news of like BlackRock and Coinbase just a couple months ago, and there's countless other examples. I don't know what reality he's paying attention to on that, but it is going to be a slow grind up. And I think it was Michael or somebody made a point that, you know, sure, like maybe maybe we can rate that, you know, maybe delayed a little bit because some of them got scared or whatever because they had a blind trust in a company like FTX. But ultimately, you know, when you do start to get in some of the other funds and others that are getting set up to be able to, you know, come into Bitcoin through, you know, people like BlackRock and others that they want to, you know, the vehicles that they'll be able to invest through, whether it's like pension funds, retirement funds. I mean, they're buy only, right? I mean, they're not actively day trading, risk off. They're you know, it will be a part of that portfolio that will, you know, they'll continue to acquire.
Is it gonna hold this low here
rapidly different
and pop up?
base is rapidly different, and that's all going to happen, I think, over the next couple of years. So, important distinction. I know that one last thing was just that tweet that I put up a little bit ago. I know sorry for putting that up. I know you have like stuff for the space specific up there, Ram. My bad. But I did pin it to my profile. I was curious if any of you guys looked at that. It was basically the correlation of gold hitting in 1974 with Bitcoin in 2021. You know, both went up to like a $1.2 trillion market cap, kind of had a double top, like a big reset down, and then going into like, you know, stagflation environment, you know, gold just continued to march forward, and my hunch is that Bitcoin's going to kind of do the same thing over this next decade. So it's just curious if you guys have any thoughts on that. But thanks.
Michael, what do you think of Bitcoin in this next cycle? I mean, do you think that it becomes a digital gold, or do you think it never
Let's
becomes a
get a
digital gold?
break. Does it want to break?
I don't understand this constant comparison to digital gold. It's like, why would you want it to be like gold? I don't. I get it. Everyone always wants to make a comparison, but it's like, don't you want it to be diversified or even a gold? Like, I mean, I go back to portfolio construction. Listen, let me be very clear on this, because some people think I'm anti-Bitcoin. I'm very anti-bullshit narratives.
There we
okay?
go. We're
Clearly,
seeing a
Bitcoin
little
is
bit
not
of a break.
based on value because that's tail risk. I said that from the beginning. Clearly, Bitcoin is not an inflation hedge. It's not a hedge, period. You can argue it's a hedge against debasement, but it is an investment. And I'm a CFA charter holder. Some people can make fun of that, but you know what? I bust my ass to get to that point. The definition of the market is not 5 stocks. It's not the S&P 500. It's not even just stocks. It's all asset classes. Okay, so to that extent, you know what? It kind of makes sense to own some Bitcoin, just because that's what being an investor in the quote-unquote market means by definition.
Michael, yeah, guys, Ted, what do you think of that?
can
Say
crack
again?
that.
Are you saying that there's no tail risk with gold at all?
Of course there is. Gold is not a
Nope.
store of value either. By definition, a store of value has to be predictable, which means it cannot have right tail or left tail risk. This is by definition. So this is what kills me about narratives like this. The moment you characterize something incorrectly and say it's a store of value, which makes it sound like it's quote unquote safe, which again means no tails, in the path, in the sequence, which is all that matters because nobody knows when our end of life is. It's always about the sequence in our lifetime. The moment you say something's a store of value and give people a false sense of security, it causes them to overweight relative to their risk profile. Now I'm talking like a fiduciary, like an alligator, right? These narratives have to be pushed back on. If you really want to lower the volatility, you have to stop making people believe that it's not volatile.
What does meet your criteria, Michael, for a store of value by that?
What does the 30 look
There's nothing.
like?
No, there's nothing. You're exactly right. You can argue, and some people will again point fun at this, but again, factually, if something is insured against tails and you have daily liquidity independent of the sequence, and that sequence is perfectly predictable,
Starting to
it's store of
break.
value. But then nothing like that really exists. The
I
closest
wanted
thing
to
might be CDs
break
up to
this
your limit,
high.
which I know sounds bizarre.
Clean break above
Okay,
that
to a lot of
orange
people,
line.
for deposits, the hell, that's
Give us
store
more
value.
of a
But again, I go back
confirmation.
to everything in life is ultimately about
1
the path
minute
with which
until
your
Powell
investment takes.
speaks.
Right? If something can have an extreme up or an extreme down, that makes it more of an investment which you have to scale in or out of properly, given your risk profile. That does not mean you put your whole life savings into something because you know what? If Bitcoin City in El Salvador was a legit thing, was fully operational, and you had wheat
Nope.
priced in Bitcoin, you would have had mass starvation last year.
Engulfed
fact.
it. Are we going down?
Do you Michael,
Looks like
do
it
you
wants to
parse,
go
like,
down.
what Bitcoin is now versus what it would be if it was a potential
11:30.
real asset?
Let's
Like,
see if we do
you
that. Make our pop
have
up.
you thought deeply about like what
I want to
is
see a
now
break
versus
above
what it
that
might be
orange.
when the holder base is completely
Break
different, it's
above
much
that
larger thing.
orange.
Like, or do you view it as having those same risks at that point as well, but maybe less ones?
A clean break
It
above
depends.
that.
I mean, if you get there with leverage, then that
Clean
changes
break
the entire
above
dynamic.
that.
Which,
We
by the
want
way,
to
I
see
go
a
back to
clean
the
break.
problem is not the underlying technology. The problem is overconfidence. Overconfidence creates leverage. Leverage leads to crashes. I've said that so many times throughout last year, including in 2021,
Nope.
and people did not
We
get it.
got
until
stopped
too late.
out. Okay.
Now I don't know. You know, maybe God gets to 10 trillion. Good, God bless.
Is
I
it
don't know
gonna
what's gonna happen.
sell
Nobody else
now?
knows. There's not enough sample period to have to
If it breaks this
Now,
low, we'll go
when
in
that
with
might
the
happen,
sell.
how the interaction against other asset classes behaves, and then what that
Waiting.
implies
I'm
for the-
waiting.
It's not me being bullish or bearish. I'm trying to simply argue that in the sense
I think my colleagues and I
Colleagues
understand the hardship that high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do.
All right.
Price stability is the responsibility of
I'm
the
gonna go
Federal
and take a sell
Reserve
here
and
now.
serves as the bedrock of our economy. Without
We're gonna
price
put our
stability,
stop
the
loss
economy does not
above.
work for anyone.
We're gonna
In
put our
particular, without price
TP
stability, we will not achieve a sustained period of labor market conditions that benefit all.
where this trend line is over here.
Today, the FOMC raised our policy interest rate by 25 basis points. We
Alright,
continue to
another sell
anticipate
here.
that ongoing increases will be appropriate in order to attain a stance of
Put our
monetary
stop
policy that is
loss
sufficiently
above.
restrictive to return
We're gonna put
inflation
our
to 2% over
TP.
time. In
What
addition,
happened to our
we are
line?
continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments.
Let's go on the
The
4
U.S. economy
hour.
slowed significantly last year, with real GDP rising at a
Target
below-trend
that. The
pace of
second one, we
1%.
could actually target the wick over
Recent
here.
indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a
Alright,
subdued
TP
pace, in part reflecting tighter financial
It's
conditions
breaking
over the past
down.
year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates.
Let's see how low
Higher
we
interest
can
rates and
go.
slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago.
I want to see some continuation here.
Inflation remains well above our longer run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%.
Yeah, we're
The
targeting
inflation
this
data
work
received
right
over the
here
past
on
3
the
months show a welcome reduction in the monthly pace of
touches it.
increases. And while recent
Actually, put
developments
on
are
the bottom of the
encouraging,
wick.
we will need substantially more evidence to be confident that inflation is on a sustained
Strong
downward
feeling
path.
we'll touch
That's not very
that.
impressed. Very, very impressed.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
Doing.
But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
We should see a little pullback.
The Fed's
here.
monetary
Nothing
policy actions are
crazy.
guided by our mandate to
I
promote
don't wanna see
maximum
that
employment and
candle
stable
go
prices
off.
for the American people.
We will have to
My colleagues and I
exit.
are acutely aware that high inflation
That candle
imposes
engulfs, we're
significant
gonna have to
hardship
exit.
as it erodes purchasing power,
I'm out.
especially for those least able to meet the higher costs of essentials like food, housing, and
I don't like the way it
transportation.
engulfed.
We are highly attentive to the risks that inflation poses to both sides of our mandate,
So at this
and we are
point,
strongly
I'm actually
committed
gonna
to
look.
returning inflation to our 2% objective.
I think so far.
At today's meeting, the
we
committee
take
raised the
long
target
here.
range for the federal funds rate by 25 basis points, bringing the target range to 4.5 to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year.
Yep,
We
I'm
continue
taking
to
a long.
anticipate that ongoing increases in the
It's gonna
target
pop
range
up
for the
now.
federal funds rate will
We're
be
gonna put our
appropriate
stop below.
in order to attain a
We're gonna
stance
put
of
our take
monetary policy
profit
that is sufficiently
back
restrictive
into
to return inflation to
the zone we
2%
were looking
over
to go
time.
to.
We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals, as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and
Want to see
inflation.
it break?
We have been taking forceful steps to
There we go.
moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation
Wanna see it
expectations
pop up?
well anchored.
Heavy.
Reducing inflation is likely to require a period of below-trend
Wanna see
growth
it
and some
pop up
softening of labor
heavy?
market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the
Okay, that's
job
looking
is done.
good.
To conclude,
Now we're gonna put our
we
stop
understand
loss
that
in
our actions
profit,
affect communities, families, and businesses
and
across
we're
the
gonna let
country.
it run.
Everything we do is
up
in
into
service
our
to our public
TP.
mission. We at the
I wanna see
Fed will
this
do everything we
break.
can to achieve our maximum
I'm
employment
gonna add
and
a
price
second
stability goals.
position.
Thank you, and I look forward
We're
to your
gonna put our
questions.
stop loss below.
Okay, so this is where it
Put our
usually gets spicy.
TP
Let's just
up
see
in
what
this
happens with credit. So far, the market hasn't really reacted.
Chris Rugaber,
Starting to see
Associated
some
Press. Thank
rejection.
you for doing this. As you know, financial conditions have loosened since the fall, with bond yields
Starting
falling,
to reject.
which has also brought down
Pullback.
mortgage rates, and the
now
stock
I wanna
market
see it
posted a solid
fly
gain in
up.
January. Does that
Yes,
make your
sir,
job
into
of
our
combating
TP.
inflation harder? And could you
Come
see
on.
lifting rates
Come
higher
on.
than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
I want to see that break.
So it is important that some overall financial conditions continue to
Wanna see
reflect the
it
policy
break,
restraint that we're putting in
break.
place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
I think we'll break and get up there. Yeah,
Hi,
lots of
Chantal.
volume
Thank you for
pushing
taking our
up.
questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration
wick.
in prices, in wages, and
Crack
a fall
it.
in
Let's
consumer
fucking go.
spending, all while the unemployment rate has
Clear
been able to
candle
stay at a
space.
historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all,
Come
to
on.
see inflation come down to the levels you're looking for?
So I would say it is a good thing that the
Into our
disinflation that
TP.
we have seen so
Into
far
our
has
TP.
not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector.
go.
You see
That
inflation
was the initial move we were
now
looking
coming
for.
down because
First
supply
move we were
chains have been
looking
fixed. Demand
for.
is shifting back to services, and shortages have been abated. So you see that
Come on.
in the other
Let's
in
go.
the housing services sector.
Almost there.
We expect inflation to continue
Probably see
moving
some
up
rejection here.
for a while, but then
I'm gonna
to come
go
down, assuming that new
ahead.
leases continue to be lower. So in those two sectors, you've got a good story.
And
The issue is that we have a
Close
large
one of
sector
them.
called non-housing service, core
Close one
non-housing
of them out,
services, where we
secure
don't see
some
this inflation
profit.
yet. But I
now
would say
we're gonna
that
let this one
so
ride.
far, what we see is progress, but without any weakening in labor market conditions.
Has your,
Got some rejection on the
has your
left here.
expectation for where the unemployment rate might go changed since December?
Bro, that
You know,
entry,
We're going to write down new
Fucking
forecasts at the
amazing.
March meeting, and we'll see at that time.
this
I will say
entry
that it
right
is
here,
gratifying
bro.
to see
Wow.
the disinflationary process now
Just,
getting underway, and we continue to get strong labor market data.
just crazy.
So,
Entry is
but, we'll
amazing,
update those
bro.
forecasts in March.
Amazing.
So far, the market's responding pretty
Let's
well.
go.
Bitcoin at 23,000
Hit
an hour.
that
TP.
TP. Hit that
You
TP.
and some of your colleagues have emphasized the possibility that job openings could come down and that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning, job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. We've seen
Perfect.
average hourly earnings, and now the
Almost there.
employment cost index
Almost
abating a little bit,
there.
still off of their highs
Getting
of 6
some
months ago
rejection
and more,
here.
but still at levels that are
Blast
fairly
through it.
elevated. The job openings number in JOLTS
Bit
has
of a
been quite
rejection.
volatile recently.
And
Yeah, I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator, but nonetheless, you're right. We do see wages moving down. If you look across the rest of the labor market, you still see
I am
very
gonna go
high
ahead and take that. I'm out.
payroll job creation.
I am out.
And quits are still at an elevated
Yeah, we may get a
level.
little
So
pullback.
many indicators,
But
the job
fuck,
market is still
bro.
very strong.
Amazing day. we had a couple
So
losses
Powell
here,
keeps
hit our
reiterating
stop
strong
loss,
jobs,
and
economy
then
strong, markets
we
are
pretty
strong,
much
economy strong,
we
S&P
took
down.
this short, keep these two shorts. We took this down, and then the second we saw this candle engulf, right, we got out and took longs up into the zone right here. Let's slow this down. So we had our TP up here, but we do have some resistance over here. I do anticipate this continuing.
Obviously back in
But
December,
yeah,
and the
that's
median
a
for
good
that
day.
was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did